What's interesting is you have a market in the U.S. that is looking for the Fed to cut rates as early as September, maybe December, but you have also at the same time Japanese yields moving much higher. This has been a generational trade that has been unwinding. What are the implications of it? There are a lot of questions about the market in Japan and whether this will redirect capital flows. What are your clients saying?
Well, so I think, first of all, the clients are relieved that there's some resolution. So whether it's 15%, and obviously bearing in mind that, there's a big difference between the reciprocal tariffs, the sectoral tariffs, some of the existing strategic tariffs. So it's not a clean 15%, as Matt said, it's varied. I think when it comes to the US monetary policy, our view has been that the Fed was going to wait, and it's still our view that the Fed doesn't go until December. In the Japan world, I think there was a lot of uncertainty, a lot of nervousness, which was driving the long end of the curve in anticipation of where this tariff deal might end up. That's resolved itself. But I think there's something very interesting going on, which is if you look at what's happened across various of these periods of volatility, think about the gilts market in the UK, think about the long end here, think about the JGBs now. When we see rate markets sell off into these periods of uncertainty, when resolution arrives and the markets recover, the long end is not recovering anywhere near as much as the rest of the curve. So if there's one sort of concern that sits out there right now, it's how the long end of the curve performs. And I don't think that's purely related to monetary policy. It's related to a whole range of other concerns, including the uncertainty that we still have around tariffs, including some of the narratives around Jerome Powell and the independence of the Fed, and also, obviously, across a lot of countries, the fiscal position of these countries.
So certainty is key, and the volatility that we've been seeing in the first half has kind of freaked everybody out. We've been poo-pooing M&A, poo-pooing IPOs, and yet we're about to talk to Adina Friedman from NASDAQ. They had the best first half for listings since 2021. Are you seeing that as well? Are you feeling that as well in markets?
So very clearly on the M&A side, we've seen the deal count drop. In fact, the deal count's dropped to probably the lowest levels we've seen in many, many years. But the value of the deals that have been transacted has not dropped anywhere near as much. In fact, it's remained relatively stable. And that's been driven off the back of a few mega deals. Now, for us, the picture's very different because Japan has been a very hot market on the banking side in M&A and IPOs. And we've actually had close to record performances in that space. In fact, in the global M&A tables, we're currently number 11, which is probably the highest we've been, and that is driven by the strength of the market, where we obviously have a leading market position.